Well, it's September and I've got the latest figures and news to share with you to keep you as up to speed as possible with what's happening in the housing market, both nationally and locally here in Spokane. My name is Phil Wells, I'm a real estate agent who likes to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to be taking a look at pending home sales. We're going to be looking at mortgage rates as well as mortgage application rates. We'll then look at some real estate news that stood out to me recently, and at the end we'll try piece it all together to make sense of it and see where the market's heading. So, let's get into it. Looking first at national pending home sales. Just a note on these figures, they are the latest figures that are available, but they are from July. We obviously look at pending home sales rather than closed sales because it takes a while to actually close a transaction. So closed sales in July would represent activity back in May and June time, whereas pending home sales for July give us the most up-to-date impression of where the market's heading. Contract signings posted a month-over-month decline of 1.8% in July. Year-over-year, contract signings dropped 8.5%. I think there is some value in year-over-year figures, but just remember we're not comparing 2019 to 2018, we're comparing two of the most unprecedented years in a century. So I'll leave it to you to decide how much emphasis to place on these year-over-year figures. Where I am in the West region, the index rose 1.9% month-over-month, and year-over-year it was down 5.7%. We've been seeing a seesaw of activity when it comes to sales this past year. This month, though, represents the first month of two consecutive declines this year. 2 data points doesn't make a trend, but I'll of course be monitoring this very closely. For those thinking that a crash is coming, remember there are multiple factors that could drive a decline in sales. There could be dramatically reduced buyer demand. Alternatively, there could be too few houses for sale. And that's why I do these videos. I want to dig into the cause and effect behind the headline figures that you read. According to the National Association of Realtors chief economist, the market may be starting to cool slightly, but at the moment there is not enough supply to match the demand for would-be buyers. The economist continues, that said, inventory is slowly increasing and home shoppers should begin to see more options in the coming months. Homes listed for sale are still garnering great interest, but the multiple frenzied offers, sometimes double-digit bids on one property, have dissipated in most regions. Even in a somewhat calmer market, a number of potential buyers are still choosing to waive inspections and appraisals. I wanted to add at this point that we are seeing price drops becoming more common in this market. However, I want you to be aware that price drops can come about in various different ways. Firstly, agents know that price drops get treated by websites like Realtor.com with high interest and get pushed out to people on their mailing list with high prominence. Because of this, it's becoming common to see a property list for over what it would normally be listed for, and then immediately get reduced down to that list price. I get a sense from buyers that they're less willing to play games and bid over asking to win a property, and I think that this automatic price drop down to where the list price should be is a way of triggering that sort of bargain response like you get from, Black Friday. You mark something up, then mark it down, and it feels like a bargain. The other way that price drops come about, of course, is because people are listing too far ahead of where it should be and are forced to reduce the price. This is why working with an agent that can perform proper, accurate CMAs is so important. Let's move on quickly now to look at mortgage rates. Obviously, most people are using a mortgage when they're buying a home, so keeping an eye on rates is a good leading indicator when it comes to buyer demand. Sticking with July for a second, mortgage rates at the start of July were 3.18%, and by the end of July, they dropped to 2.84%. So a nice steady decline in rates there in the month of July. I am able to give you up-to-date figures, and as of September 9th, when I'm recording this video, rates are currently 2.95%. So this is a really positive sign for buyer demand. Anything around a 3% rate for a 30-year fixed mortgage is a pretty incredible rate. With increasing inflationary pressures though, I'm wondering how long these rates can stay low, and this is one factor that I'm going to be watching very closely in the coming months. Sticking with mortgages for a second and looking at mortgage application rates. Doesn't matter what mortgage rates are if nobody is applying for a loan. This is a huge leading indicator when it comes to the overall housing market. So let's head over to the MBA, the Mortgage Bankers Association, and see what the experts have got to say. Just a note, we're no longer looking at July now. The MBA publishes figures weekly, so we're able to get a really up-to-date impression of what's going on there. Mortgage application volume fell last week to its lowest level since mid-July. As mortgage rates have stayed at just above 3% for several weeks, refinance volumes have been moderating, while purchase volume continues to be lower than expected given the lack of homes on the market. Again, we're seeing a lack of inventory here being the cause for lower purchase applications. This lack of inventory is becoming a real problem when it comes to trying to get an overall impression of the market. We can't get an accurate impression of the market if inventory is so low that all the houses are getting snapped up, and the only limiting factor is the number of homes available to sell. Now let's try to get some further insight into the real estate market from a news article. Normally I show you a bunch of articles for this video, but in this video I wanted to focus on just one article from Realtor.com. It covers a lot of information, provides some great analysis, and provides some really valuable predictions. Okay, let's take a look at this article. The housing market is expected to shift to something closer to normal this fall, real estate experts say. They anticipate more homes will go up for sale, helping to slow down the unparalleled price increase and bidding wars of the past year. But the market is likely to remain highly competitive, as there will still be many more buyers than homes to go around. Absolutely. This is exactly what I've been saying to my buyers, particularly my investor clients. While the market is slowing down, what that represents on the ground is a handful of people looking for the same property rather than a dozen people looking for the same property. It's still very competitive out there. The market does not have a magical way of sustaining this pace of price growth, because you're going to run out of people who can afford it. However, that doesn't mean that home prices, whose national median hit an all-time high of $385,000 in the week ending August 14th, will fall. The shift in the housing market will make shopping for a home a lot more tolerable than it has been, because consumers will actually have time to properly think about their decision and won't be in as fierce of bidding wars, says Ali Wolf, chief economist of building consultancy Zonda. Going into fall, buyers may not need to pull out all the stops to win a house, like removing inspection contingency or waiving the appraisal contingency. Families typically prefer to get settled before the school year begins, but this year, the COVID-19 pandemic threw off the normal timing, and activity is expected to stay brisk after summer's end. I expect an unusually busy fall. Sellers are putting homes on the market. Normally this activity happens early in the spring. So you can see from this article that economists are bullish on the housing market. They see house prices leveling off, not dropping, and see the fall season to be uncharacteristically busy. And through it all, they expect buyer demand to remain strong. So now let's take a look at my local market, Spokane. Okay, we can see that sales are down 1.7%, median house prices are up 22.9%. Now, interestingly enough, on that median price point, that does actually represent a slight fall from last month, where the median price point was $395,000. So a slight decline there in median prices month over month. If it is only $5,000, it's worth note. Inventory is down, and new listings, really good positive sign there, new listings are up. The biggest takeaway from that report, in my opinion, was the decline in median home prices. It was only slight and it could be seasonal. We'll have to wait and see if what the economists in the previous article were saying about a stronger than expected fall will be true. But in the meantime, I'll be watching what happens to October's median price point very closely. Sticking with the Spokane market, I wanted to touch on a study that came out recently from researchers from Florida Atlantic University and Florida International University about the top 100 housing markets for over and under pricing. A lot of media outlets are reporting this by saying that Spokane housing market is overvalued. Well, to this I would say, how do you determine what's overvalued? To imply a city is overvalued, you must have a base. So, what base metrics are available out there? Well, according to the National Association of Realtors, the national median home price in August was $385,000. In San Jose, the 79th most overpriced market according to that study, the median sales price was $1.265 million. In San Francisco, the 84th most overpriced market according to that study, the median sales price was $1.5 million. So what is the median home price in Spokane, you might ask? Was it $1.7 million? Was it $2 million? No, the median home price in August, according to the Spokane Association of Realtors, was $390,000. In that study, they say that homes in Spokane are going for a 45% premium, according to Zillow figures. 45% seems absurdly high. On a fundamental level, I call into question the figures themselves. The most I've ever overbid with a client was around 15%, and figures from the South Hill neighborhood here in Spokane seem to support this too. For those of you who don't know, the South Hill is one of the most desirable areas to live in Spokane. So if we're going to see sales prices over list price anywhere, it's likely to be here. For the last 6 months, the typical sales price in the South Hill has been 105% of list. And year over year, median home prices in Spokane have risen 22.9% in August, according to the Spokane Association of Realtors. In the study, they say in the methodology that they're relying on the Zillow Home Value Index. This measure is a smoothed and seasonally adjusted housing index that is reported monthly with a 3-week lag. The Zillow Home Value Index does not include tails of reported transactions. Instead, it only reports closings in the 35th to 65th percentile range, which allows for a more accurate estimate of any local housing price trend. So it's pretty plain to see that in this study they're relying on an algorithm as the base rather than the data provided by the National Association of Realtors, which is based on actual supportable data. So essentially they're comparing actual sales with what the Zillow algorithm says an area is worth. Could it be that the Zillow figures are wrong? I wouldn't say that. I'd never say that, but some people might. Now let's try piece all this information together. We have a decline in July pending home sales. Prices continuing to climb, evidence that buyers are becoming more selective and refusing to play games, great mortgage rates, the prospect of a strong fall season, more houses coming on the market, and the prospect of sustained buyer demand. To me at least, it feels like the market is beginning to level out, and I certainly hope that supply increases to meet that buyer demand. That's it for this video. If you gained from this video, please like and subscribe, that really helps me out. If you are in the Spokane area and you're looking at listing your home for sale or buying a home, please reach out to me. Give me a call, shoot me a text, send me an email, and I'd be honored to work with you. Like I said, my name is Phil Wells, and until the next one, thanks for watching.